afternoon, everyone, and welcome to Traders Espresso for Wednesday, February 7th, 2018. Interesting day in the markets today. It was looking like it was shaping up to be the second day of a correction, of a return to normalcy. I think that's what everybody wants. I don't think we're going to get that wish. There was only in the morning, all of the indices were in the green, very solidly, by the way, and they were, the futures were leading that. We still saw disparity in pricing. Some indices performing stronger than others. I mean, they don't move in lockstep with each other, but we don't normally see them so disparate. That weakness or that strength was curbed dramatically in the afternoon session, and selling accelerated into the last 15 minutes of the day. If I were to take a look, if I take a look at a chart here of the Russell, if you take a look at a 15-minute chart, and pretty much all of the indices looked this same way. This last bar here, that's the last 15 minutes. It was just non-stop selling. Nobody wanted to go long overnight. And that was true of all four of the indices, or five of the indices. Russell, NASDAQ, NASDAQ 100, S&P, and the Dow Jones Industrial Average. The only index that ended even remotely in the green was the Russell 2000, and that was up 5 basis points, so it's really nothing to write home about. Everything else was down. The biggest loser was the NASDAQ 100. It was down 1.26%. The composite was down 0.9%. The S&P was down 50 basis points, and the Dow Jones Industrial Average was down 8 basis points. So that was pretty slim. Volatility is off of its highs, but it's still elevated. It has come in from the 38 and the 50 in the overnight from a couple days ago. It did not close the day on its lows, though it came off of those lows later in the day. So I think VIX being elevated is still a concern. One of the things that has me concerned, if I take a look at these indexes, we've all looked at it together, where we had these stock indices break out of their channel, trade to new heights, and then come crashing down, get pulled into the channel like we expected. Okay. The Russell is the only one that didn't do that. Actually, the NASDAQ hasn't done it either, but it's not necessarily a good thing, and I'll show you why in a second. The Russell is the only one that didn't do that in terms of it didn't break out of its channel. Okay, I think, like I said, the Russell is actually finding, or has found, a bottom. You could take a look at this chart and argue that, well, it actually did, because it was trading in the bottom half of this channel. It broke out, and now it's getting pulled back in. Okay, I mean, I'll give you that, but the fact of the matter is that this is a long-term channel drawn on the weekly chart. All the other channels were long-term channels drawn on the weekly chart. The other indices broke out. This one didn't. I think the Russell is the one I'm most comfortable leading us out of this correction right now. I mentioned that the NASDAQ, doesn't paint a good picture, and it truly doesn't, because the NASDAQ and the NASDAQ composite, they've broken out, but they have not settled back in. They absolutely refuse to go back into their channel, and I don't think that is healthy at all. I mean, yes, it traded down, but it closed above. It has not shown any kind of a healthy sell-off like the other indices have. So the NASDAQ, if you've got a shopping list, and the shopping list is NASDAQ 100 names, like Apple, like Amazon, like Google, keep them on your list, but I wouldn't rush into buying them just yet. I think this healthy selling needs to happen. Another thing that we should look at, which I think only reemphasizes that point, is the Russell, or rather is the Relative Strength Index. Okay, all of these indices, okay, from the Dow Jones has traded down into oversold and has now bounced back up, and it's a little bit of a dog leg down, so I don't know if that's a good thing, but it did at least touch oversold. All right, this S&P 500 touched oversold, bounced off, running down again. The Russell 2000 touched oversold, bounced off, a little bit down, and by the way, its average true range is not just slowing down, but actually reversing direction. I think that those are both positive signals for the Russell 2000. All right, what did the Nasdaq do? The Nasdaq 100. All right, it refuses to go into oversold territory. I don't think that's healthy. I think it needs to. Okay, same thing with the Nasdaq Composite. Refuses to go back, and it didn't even touch the bottom of its channel. And this actually isn't this is kind of a poorly drawn channel. I think I did another one for this. That doesn't matter. Point being, it just refuses to be oversold. It needs to. I think that we need a lot of that weak hands flushed out of the system, purged out of the system before these indices can move definitively higher. Okay. Looking at the 11 S&P sectors, 3 of them were in the green today. Industrials, financials, and telecommunication services. Okay. I think it would be a good idea to take a look at, if you're not looking at individual names, to look at sectors. I think that we're going to see a rotation out of certain sectors into other sectors, which is going to precipitate a sustained move higher. And those sectors that are going to move up are the ones that are going to complete a healthy correction, that are actually going to not refuse to drop into oversold territory. Okay, energy is there. Materials was there. It bounced off. Industrials, same story. Consumer discretionary, interesting, that is holding on. So that would be one to keep a wary eye on. Consumer staples, it's oversold. It's allowing itself to move down in there. Healthcare, not so much. That would be one I would worry about as well. Financials, not so much. That's one I would worry about as well. There's been a lot of bullish sentiment on financials, and I think that they need to be a part of this correction just like anything else. Information technology, well, we already saw it with the Nasdaq. Why would the IT sector be any different? Telecommunication services, even more of an egregious offender than the information technology. Utilities, oversold, still in oversold. Okay, that's look for this to continue for a while and bubble up. That might be a good place to nibble as well. And then real estate hasn't really moved into that oversold territory. Maybe it needs to. So as we get back into sector rotation, I mean, this is broad-based, still broad-based selling, out of these sectors. Those are the sectors that you want to pay attention to, are the ones that, sell off and actually hit a state of being oversold, so that some fresh hands, some fresh money can come into the market and bid these things back up. It's just not happening right now. I talked about the VIX being off of its, or having come in from its highs, and still being off of its lows. Is volatility the return of volatility here? Yeah, I think so. I mean, look, this is not normal. I mean, we were, a return to normal, a reversion to the mean would be falling somewhere below this 14 handle. Okay, and it just hasn't done that yet. The lowest it's reached is about 21 and change. All right, so I'm not saying high volatility is here to stay. I'm just saying that volatility has not gone away yet. All right, it sold off today, but it closed the day off of its lows. So take that for what it's worth. I think that the best leading indicator is the dollar, strength of the dollar. If we take a look at the dollar index, you'll see what I'm talking about. First of all, what was it that precipitated the down move on Friday and Monday in the first place? It was concerns about inflation. It was concerns about a more hawkish Fed, unwinding the balance sheet more aggressively, driving interest rates up, and then changing their policy stances increasing interest rates more aggressively, and that's just going to derail the stock market. It was those fears that basically caused, whatever you want to call it, taper tantrum 2.0, or maybe even just 3.0. I don't know. But that was what precipitated the move. And if you look at the dollar index is up 4 consecutive days. Okay, we're looking at the price channel that it was trading in, the downward price channel drawn on the weekly chart. It hit a bottom here, and then kind of bottomed out again, and then it's just been 4 straight days up, including today, which was a tremendous move. Okay, if dollar traders believe that that condition still exists of the possibility of inflation and a more hawkish Fed, the equity traders need to consider that as well. I mean, the market corrected yesterday. Great. Or not corrected yesterday. I mean, it gained back some of the losses from Monday and Friday. Great. Nothing's changed. Fundamentally, nothing has changed. So I think keep your eye on the dollar. When the dollar starts to ease, then it may be time to signal the all clear, but we're just not there yet. And look at all this room that it has to go. It's trading back up to the top of its channel. It's already past that midpoint. Unless there's some force pulling it back down again, everything looks like it's momentum to the upside. All right. If we take the drawing off and look at just, or if we take the trend channel off and look at just the Fibonacci, okay, it still can trade up to this 91.7 level. All right. If we put that Fibonacci back on, that could happen here. Could happen here. All right. Well, if that's the case, and it could be, we're not looking until about mid-March. All right. It's not even mid-February yet. We're in the first week of February. First 7 days of February still. So I wouldn't come out of the bomb shelter just yet. That's my point. That's pretty much all I've got. Those are my thoughts. Yes, equity markets are stabilizing. We're not out of the woods just yet. Keep that shopping list. Be nimble. If there's names for the NASDAQ 100, be careful with those. Look at sectors. If you don't want to look for individual names in those sectors that I named, look, trade the ETF itself that's associated with that sector. Once it's hit an oversold condition, looks like the RSI is improving, then it might be time to take a nibble and kind of scale into a position. But that's what I'll be doing. So great. Thanks for watching. Have a great evening, and I will see you all tomorrow. Thanks.